Hello. I just thought I'd do a quick podcast. This is Friday the 13th, May 13th, 2022. And it looks like we're going to get a real strong open here on the markets. We've got the Nasdaq up over 2% in the futures. We've got the S&P 500 up about 1.5%. And I think we're going to end up having a powerful short covering rally. And as I predicted a couple days ago, that it looked like the Nasdaq had finished its big selling, and we're going to go into this period of fairly choppy, up and down markets, highly volatile. Now, keep in mind, today I think is going to be a little different, or I think we're looking at an update, but it's going to be more of a short covering rally day, and this is going to be sort of like an escalator type buying, where I don't think you're going to have these big swings today. I think you're just going to be kind of looking up at this buying pressure steadily increasing throughout the day. I mean, that's just what I'm seeing here. I could be wrong, but that's my thoughts. I think one of the reasons behind this is going to be the very high put-call ratios. Everyone was buying puts in this last couple weeks, and they're spread out all throughout the next couple months. And these people are going to be getting out of all these puts. They're like, hey, this is over for now, and they don't want to be. You don't want to be holding puts when your market is doing a strong rally, right? So these people are like, hey, I got to get out of this. And the faster and harder the market goes up, the more max pain these people are going to be feeling. And so it just adds to the fuel of this rally, because people got to get out of all these short positions they're holding, whether it was stocks or I think one of the biggest drivers is going to be the puts in the futures that they were holding, and there was a lot. So the dealers are going to have to buy back these puts, and this is going to be a kind of a dangerous situation for these dealers. If they don't play this right, then they could be looking at liquidation. Some of these market makers, if they don't handle this well. So that's a danger when you have these extreme put-call ratios, that it puts a lot of pressure, behind the scenes in the market that maybe a lot of people don't see with the futures. That's and not only that, the future market is getting more and more dominant over the last few years. Like it used to be that it wasn't such a predominant force, in the equation. But like if you look at the last couple of years, the amount of people who are using the futures, probably for hedging or speculating, is increased dramatically. So you've got, that behind the scenes, that really can be a market driver, much more than in the previous years. And one of the reasons that the volatility, the VIX index, isn't working out the way it planned during this sell-off. Everyone was saying, oh, it's got to spike up to 40 something, and that means it's over, the capitulation, the VIX, 42, 43, that's it, it's done, time to go home, it's over. No, because of all the puts out there, it's preventing the VIX from doing the capitulation thing that we're used to seeing. You have some put call ratios in some days over 4. Okay, so what's happened is people are so prepared for this sell-off. Maybe some are really late, but still at this point, there's a lot of bearishness in there. And as I mentioned, the sentiment that I was reading, out there, and whether it's other YouTubers or CNBC, and the market's in turmoil, and all these analysts are so bearish. You could see that this is so overdone, and that's why I made that video a couple days ago about how everything looks like it was so overdone and finished, especially for the Nasdaq. Now, keep in mind, when you follow all these lagging indicators, you're not going to get that. You're not going to get that. You're still thinking, oh, it's going to go down, right? Because you're looking at your moving averages and you're looking at your crossovers. We're waiting for those, and so you're going to be real behind the eight ball if you were bearish and you're waiting for all your lagging indicators, like a lot of people do. You can't do that. That's why I did that video about the lagging indicators. That you kind of have to start trying to get away from that stuff, because you're just going to be behind all the time, and it's going to be like a wrecking ball, especially when you have this volatility. Volatility kills moving averages. So I try to look at more things like sentiment, to give me a guide when the markets are topping or bottoming. So anyway, good luck with trading today. I hope everything works out, and we'll see you later. Thanks for listening.